Use liquidity sweeps to improve your win rate drastically in trading. Now let's go over real quick what even is a liquidity sweep. For those that are completely new to trading or brand new to trading, you don't know much about the markets and how they move. Liquidity sweeps can be defined in two different ways. They're either time frame liquidity sweeps or session-based liquidity sweeps. What do I mean by session-based liquidity sweeps? Well, session-based liquidity sweeps are, for example, session highs and lows. For example, Asia session, London session, New York session. These are the three main sessions in the markets for any pair or asset you're trading. And every time we take out a low, as you can see, or a high of each session or previous sessions, you can see the market does at some point create a reversal point. So that's exactly what session-based liquidity sweeps are. You can see here, for example, we took out the A session low here, that we didn't have a nice reversal to the upside. We took out A session and London session high here. When we have a double sweep like this, it gives you a bit more confidence and confluence, depending if you're pro trend or counter trend. And you can see we had a very, very nice dump off of that. You can see we took out London session low here. We had a very nice reversal. New York session high. We did not have any confirmation to go in the short here. In this case, if you're brand new to trading, you probably don't know much about confirmations. So that's going to be talked about within a course, or even join the free Discord. You can probably find some information in that server. Again, you can see session highs and lows work very well. At some point, they're not going to work. As you can see, we took out New York session low here, but we failed to go higher, right? These are not 100% win rate. Nothing in trading is guaranteed or 100% win rate, but as long as your edge is in your favor, that's all you need in the markets. You need something that basically is repeatable, mechanical, and you can repeat and works out more often than not. Here's another example here. A session low, boom, reversal. A session high getting taken out, boom, reversal. London session low never got taken out here. We mitigated it internally. And then New York session high got taken out here, boom, reversal. You can see there's just so many different ways you can pair reversals in the market. So you can see New York session high here, even back all the way back here, got taken out, boom, you got a nice reversal trade here, whether you want to scalp or whatnot. It's not a picture perfect, it's not 100%, because look, these two lows here, they got swept and we ultimately failed. Let me actually change the indicator here real quick so it shows more past sessions real quick. If you're wondering what the indicator here is, it's part of my ETU Elite Indicator package. It's just $49 a month, link down below, and you get access to all 7 of these indicators here, which really marks out everything that I need within my strategy. And session highs and lows is indeed part of that. So you can see it's not going to be picture perfect every time, but more often than not, it does work out. Look how perfect New York session low. I'll give you guys a bonus pro tip here, free sauce by the way in this video. New York session kill zone low, for some reason, not sure the exact reason, it's probably because there's so much liquidity during the beginning first 3 hours of New York session kill zone, which is basically in the first 3 hours of when New York session opens, that New York session highs and lows tend to get swept, and you get very nice high win rate probabilities off the kill zone for New York session than compared to other session highs and lows. So just something I've noticed whenever I trade after New York session for New York session, it just works very, very well. But that doesn't mean the other sessions don't work too. Look at A session high, sweep, boom. We target A session low, boom, sweep. London high, barely got missed in this case. We probably might have hit it on NQ or another correlated asset, went lower. London session low got taken, boom, nice reversal, right? But again, you don't want to take these reversals blindly. You want to have some type of confirmation, whether that's on the 1 minute, seconds, whatever type of entry model or whoever's strategy you really want to learn from. I believe entry models are important in trading, but you need context, and liquidity sweeps help provide you that context in trading. So let me give you guys another example. That is an example of time-based liquidity sweeps. One last reason why time-based liquidity sweeps or session-based liquidity sweeps work so well is because basically it's just picking out the strongest or biggest, most prevalent high or low during a given time frame. So that's why they work so well. It's not necessarily because of a specific time. It's more so because these are the most prevalent highs and lows, and the most prevalent highs and lows, aka the most obvious highs and lows in the market, tend to get taken out at some point in the market. That doesn't mean we get an instant reversal first attempt after taking out, but we will get a reversal at some point. So you can see these are just examples of session-based liquidity sweeps. Now let's go over the second type of liquidity sweeps I'd really like to use, and that is just something like using either the 1 hour, 4 hour, 30 minute. So for example, let's say you're looking for a high here. This high here, you want to be looking for prevalent swing highs, preferably in the higher time frame. So something like this, where it causes a big move in the market, you don't really want to focus too much on like very, very tiny highs and lows. Here's some examples. I could say probably very tiny, just like something like this low here, for example. It's not really a prevalent low. You want to look for bigger swing points on the higher time frame. So something like this, you can see obviously create a huge reaction in the market to the downside. taking out that 30-minute high. Here's another example here, right? We took out this high here. We did have a tiny reaction here, but we later pushed through because remember, this is pro trend. Price is trying to go higher on a higher time frame. If you're even go to like 4 hour, for example, we're clearly bullish. We're going to the top right of my screen, not the bottom right. That's the easiest way, beginner's guide on how you can identify trend properly in the markets. The most simple brain dead way. Here's another example of a sweep, but on the 4 hour, you can see this is a very prevalent 4 hour low. This is not some random 4 hour low like in the middle of nowhere like this or this. Not saying that these don't work, but they're lower probability, or not low probability, but more so they're not going to cause this big of a move, right? You see how big of a move this sweep low caused, but something like this still will work, like this low here. Why? Because look at this pullback. This is still a solid size pullback. This is not like a random bullish candle low, something like this that just hit wicks it. In this case, it actually reacted off something else that I do talk about within the course. I'm not going to talk about in today's free little beginners video for y'all out there. Not that nothing wrong with you guys beginners, but it's something a little more complex and complicated, more advanced. I'm just going to leave within the course, but highs and lows do work very well. As you can see, these highs, boom, we took it out, went down. We took out these highs, boom, went down. Even if we were bullish, right, at some point, price will come back. Price cannot go in a straight line like this. No market ever goes up in a 90-degree angle like this. We tend to have manipulation, go higher. Again, the market's not going to always make higher lows, higher highs like this, picture perfect. It's going to make manipulation, boom, sweep liquidity, go higher, boom, sweep liquidity, go higher, boom, sweep all this liquidity, go higher, right? Nothing is picture perfect in the market, but as you can see, highs and lows still do work in the market, especially if you pick good swing points that are pro trend, like these at some point, right? This is low probability, obviously. There's reasons as to why. This is low probability than in comparison to this shorting here. Not something I'm going to go over in today's free low lecture. That's some secret sauce right there. But you can see they work very well. Usually for me, I like to go switch time frames and find whichever ones I find closest to price, because remember, I'm trading personally on the 1 minute. Some guys might be trading maybe on like the 5 minute or entering on the 30 minute, which is a completely different story. But for me, this is why I love session highs and lows, because they're 100% mechanical. You cannot like make a mistake on session highs and lows as long as you're just using my indicators I provided y'all. Like there's no way you can mess up the session high and low sweeps for entry. Some people even created a system trading my strategy just off session highs and low sweeps. As long as you've done your back testing, collect the data, and know when they work and when they don't work, and when are the best conditions to take them, you have a profitable strategy right there. Just follow it, and you're actually already a profitable trader, actually, matter of fact. So again, hope you guys do enjoy today's little video, just going over session sweeps. Again, the entry models you want to take them is completely up to you. Here's another example, right? This low made a new high here. Even not taking out that high, you could have taken a short. If you go over here, you can see there's a nice short opportunity, long opportunity, pro trend, right? So hope you guys do enjoy today's little video on session sweeps and liquidity sweeps in general. This should be a pretty good beginner's guide. Go back on your charts now, go back test this and look at how well these levels are respected, and you can even filter them out through your journaling and find out which liquidity sweeps work best with your given strategy and which ones do not do the best, and just guess what? Get rid of those that don't do the best, and you will have a higher win rate. That's how you optimize your trading strategy, and that's what I did ultimately to mine to achieve a 65% win rate at 3 to 4 risk reward average. If you guys want to achieve results like that, you can join the free Discord to check out the free community resources. I do have a lot of free beginner guide stuff in there as well as thinking in terms of psychology, probabilities, stuff like that, beginner's guide. But if you do want to learn my entire strategy, click the link below and check out what I have to offer there. I'll see you guys in the next video. Peace.